This is the briefing for Friday, January 6th. If you were able to listen to the briefing I did last night, you know that I talked about the fact that we have been in a downtrend on a short-term basis. This is hourly chart for the spiders, the Qs, and the IWM representing the Russell. And I talked about this move yesterday to the downside and that fact that the internals just were not suggesting that this was going to be the beginning of something even greater to degree and time and price to the downside. Mainly, it was because of market breadth. You can see market breadth right here. This is S&P 500 breadth. And I think at the low, we're at like 176, 175 shares negative on the S&P 500, which just really isn't that strong. It was different with the NASDAQ. NASDAQ started out not that strong in terms of weakness in terms of breadth, strength in supporting a down move. But it later fell off to about 2,600 shares, which was fairly negative. And same thing with the Russell. I mean, it was only about 900 shares negative in terms of breadth in the Russell. So for the move that we saw going from about the 697 area in the spiders down to about the 675 area, the internals really just were not confirming the fact that this was going to be something stronger to the downside. And you can see even here, you can see what was happening with breadth as this move here was taking place. Now, we did get a decline in yesterday's trading in market breadth, but then it was flat for most of the day. And then, of course, in today's trading, it exploded. So really, the key yesterday was looking at the internals based on the fact of price development being lower and the internals really not being that strong in terms of supporting a move to the downside. I should say that not being that weak to support a move to the downside. We also reached a point of being extremely oversold in the NASDAQ, which suggested the potential for some type of rotation back up in today's trading also. And that's certainly what we got. Now, it was a little stronger today than I would have anticipated in terms of this move to the upside. I unfortunately just stood by and watched what happened. I did not participate in it because I was unsure of what the market was really telling us in terms of whether we were going to see this was just a pause in a rotational pattern. In other words, we know markets run and pause in all degrees of time. So you get a run, a pause, a run, a pause, a run, and a pause. But this turned out to be something more than just a pause, as you can see pretty clearly. Now, breadth expanded nicely. I have to say that the rally today was supported by the market internals. And you can see here that breadth was almost 300 shares positive in the S&P 500, 2,800 shares positive in the NASDAQ, and 1,300 in the IWM. But really, the story is what happened with net volume. Now, if I go to a daily chart, this is a daily chart of the S&P of the spiders. You can see the rotational pattern that we've been in. This goes all the way back to October of last year. You can see the up and down movement. Then we get a second time frame rotation at the upper extreme of this time frame, and then we had another rotational, shorter term rotational pattern at the extreme of this time frame also. And it looked like we were going to test this lower extreme. Now, I had a trend line up right here, right around the 676 area. And we tested that yesterday pretty closely, right at 675. So it looked like the potential was that we were going to see some type of move to the downside. But the key to that was going to be seeing the market internals weakening more than they were in yesterday's trading. And of course, that didn't happen. We didn't see any follow through. In fact, we saw a move higher and the market internals just exploded. Now, interestingly enough, this is the spiders, the SPY. You can see volume dropped off slightly in today's trading. 52-week highs minus 52-week lows exploded. I mean, it was negative about 345 shares, and it exploded up to 417 shares positive. But look at NYSE breadth. NYSE breadth exploded also up to 1,645 shares. And net volume, what volume we had, even though it was down slightly, what volume we had was mostly up volume. So there was a lot of buying that was going on in today's trading in the NYSE. This is the NASDAQ, or the Qs. You can see the rotational pattern here, another rotational pattern here. Now, this is a trend line I had yesterday. 605 was the next level of support. We broke through that in yesterday's trading. And then, of course, it held right at the 598 area, which was this low, the support from this low. And of course, we traded through that 605 area today, closing right around 609.65 area. Once again, volume down slightly in the Qs. Breadth exploded in the NASDAQ, 2,800 shares positive, and net volume exploded. So what volume we had here was mostly up volume. So there were 500 billion more shares of trading higher as opposed to lower in the NASDAQ. So that was a pretty strong day from an internal perspective. And the same thing with the IWM, the Russell. You can see volume just down slightly, but breadth exploding and net volume exploding as well. So certainly it's going to be very interesting to see what happens on Monday's open, to see if we see continued follow through. Now, as I said in yesterday's briefing, I was not really feeling like the market was going to crash or that we were going to see a continuation of the move lower. But then again, so I was not prepared to short it. But then again, the way the rally ensued today and the strength of it gave me a little bit of pause also. So it's going to be interesting to see how Monday's trading develops, because that could give us a really good indication if we're going to see follow through to the upside. And that would suggest then that we would see a higher price than higher today. And we would need to see the market internals continue to strengthen. But as strong as they were today, that might be difficult. And if there are any divergences in the market internals, that's going to suggest the possibility for some type of rotation back down again. So we're going to have to watch that very carefully. I just want to express a little bit of caution because we've been in such a volatile time period. Even in the IWM, you can see with each of these days, the buying tails and the selling tails. So really, it's almost like neither buyers nor sellers could gain control of the market. And certainly, while the Dow Industrials, only 30 stocks, hit new all-time highs, the other indices, like the spiders, really have been in just a rotational pattern for the last, since October of last year. Looking at total volume, this total volume on the NYSE, you can see it ticked up slightly, but look, once again, this net volume, it just exploded. Same thing with NASDAQ volume. NASDAQ volume was down, but net volume just exploded once again. This net volume number is just a very, very strong number. So it's going to be interesting. So what do we do for Monday? What's the strategy for Monday? Monday, we're going to see if we get some follow through. If we do get some follow through, then we know we've got some short-term resistance areas, 697 in the spiders, 635 in the Qs, and 265 in the IWM. But we need to see these internals, especially market breadth, continuing to strengthen or at least hold around the same level that it's at now. And net volume, that's going to be the key for Monday's trading. Watch that very carefully. Once again, this was a strong rally from a price development perspective and internal perspective. So let's kind of see how the first hour develops before we jump in with both feet. Have a great weekend. I'll pick this back up again Monday for subscribers.